August 1st, 2012. Wall Street opens and a 45-minute bloodbath begins. For a second, it seems like somebody's trying to buy the entire market. 4 million order executions, 397 million shares, and a position amounting to $6.75 billion. These orders originated from one company, Knight Capital. This wasn't a hacker or a bad actor or a disgruntled employee. So what the hell was it? A few days earlier, software engineers at Knight Capital began deploying new code to their servers. This new program was part of the New York Stock Exchange's retail liquidity program that was going to start on August 1st. This new code reused a binary flag from a different function called PowerPeg. PowerPeg had been turned off in 2003, almost 10 years earlier. And even though it was dead code, never expected to be called again, it was still lingering in the code base. PowerPeg's job was straightforward. Once an order comes in from a customer to Knight Capital, PowerPeg, instead of dumping that all into one exchange, breaks it apart and starts sending orders to multiple exchanges. Once the number from the original order is hit, PowerPeg is told to stop. So during the deployment window from July 27th to August 1st, 7 of Knight Capital servers were updated with the new RLP code that replaced PowerPeg. All seemed well, high fives all around. There was only one problem. There was an 8th server. Knight Capital at this time didn't have any automated process to verify deployment. They didn't even have a manual double check from the engineer that carried out the deployment, nor one of his peers. And that takes us to August 1st, which is a trading firm's worst nightmare and honestly an engineer's worst nightmare. Before market open, a system monitoring tool at Knight Capital actually flagged that something was wrong. It sent out almost 100 emails notifying them that, hey, something's wrong here, PowerPeg disabled. But on the scale of log colors from not important to terrifying, it was somewhere in the light orange category, so people ignored it. And at 9:30 a.m., parent orders start coming into Knight Capital with the new RLP binary flag. On 7 of the servers, that RLP flag triggers the new code and things are functioning as expected. On the 8th server, it trips the old PowerPeg code. It rises up out of its grave, kicks off 10 years of rust, and starts firing orders to different stock exchanges. At this point, nothing tells it to stop, so it just keeps sending orders. Immediately after market open, everybody knew that something was wrong. The New York Stock Exchange called Knight Capital to alert them that trading volume had doubled. It was a moment where software engineers and finance bros clenched so hard that the leather of their chairs has never quite taken the same shape again. Of course, the engineers figured that something with the new RLP code or its deployment had triggered this issue. So after 20 minutes, at approximately 9:50 a.m., 20 minutes after market open, they make the very reasonable choice to roll back the change. They manually unwind the new code from each of the 7 servers. After the last one finishes, they take a big sigh of relief. And at this point, the graph goes parabolic. Orders are being sent out faster than ever, multiples faster. Remember that customer orders going into Knight Capital that day had a binary flag present. On the 7 servers that were deployed, it triggered the new RLP code. On the 8th, it triggered PowerPeg. So when they rolled back, all they did was multiply their issue across 7 new servers. Approximately 8 minutes after the rollback, the engineers finally waved the white flag. Knight Capital's position has increased to over $6.75 billion. The machines are buying high and selling low, so they decide to pull the plug and kill the machines. But by this point, the damage was done. The company had lost almost $460 million. The initial shock tanked the stock price of Knight Capital by 30%. 75% of Knight Capital's equity had been erased in 45 minutes. And the company limped on for another 4 months, August to December. In December 2012, they were acquired for pennies on the dollar by their competitor GetCo. Imagine being the engineer that carried out that manual deployment and missed a server. Of course, not his fault. If you read the SEC filing, the lack of process, any process, automated or otherwise, at Knight Capital was pretty disgusting. But he can still wake up in the morning and say, I kind of lost $445 million. And it's terrifying because it's something that I could totally see myself doing, screwing up deployment. Been there. The good news is I am sure that he created an absolutely enlightening LinkedIn post. Automation is a journey, not a destination. Restructuring is just another word for new beginnings. As we prepare to be acquired by GetGo for pennies on the dollar, I am reminded that every end is just a new sprint starting up. Grateful for the mentorship of our C-suite during this dynamic transition phase. Not to mention that he can add some killer points to his resume. Spearheaded high-volume algorithmic deployment across distributed server architecture, single-handedly executing over 397 million trade orders in 45 minutes to test market liquidity and stress test firm equity boundaries. Principal architect and facilitator of merger and acquisition via GetGo. Anyways, don't leave dead code around.